It's a market that, for now at least, is continuing to defy gravity. At the time of recording, we're seeing oil push out to yet another recovery high. So this morning, we're seeing it push up to its best levels in about 13 months, back to where it was beginning of January. So with oil trading around $62 a barrel, just how much upside is left in the weeks ahead? We're continuing to see an incredibly resilient oil market. We've seen it go from November briefly below $34 a barrel to where it's trading today, having come within a whisker of around $63 a barrel. We get sell-offs along the way, but for now at least, these are proving to be pretty short-lived before the buyers come back in and push the price ever higher. We do have some hurdles coming up. The highs from right at the beginning of 2020, around $65 a barrel. That looks like the next potential target for the price of oil. But I was wondering, should we continue to buy? Should we continue to trade with the trend? Is there more to come from the price of oil during March? We do have some oil trades running at the moment. It has actually been the best market this year out of the markets we cover in terms of trade. So we've got a couple of trades running, one from the 5th of January after buying in at $48.47 and one from the beginning of February where we bought in at $57.76. So overall, we're running profits of just under £1,100 so far on oil. So the question, as usual, should we continue to run that position? Where can we add a new trade on oil? Or actually, is it time to go short? Are we surely getting to the end of this incredible move in oil over the last 11 months or so? Hello, I'm David Jones from Capital.com, and I thought we'd do an update on crude oil because yet again, at the time of recording, we're seeing the price of West Texas crude move out to a fresh 13-month high. The strong trend in oil continues, but for how much longer? So in this video, I'll talk a bit about what's been driving it, what to look out for in the days and the weeks ahead going into March. Then we'll go back onto the platform, look at the existing trades and get a new trade on because clearly we have a strong trend at the moment, plenty of volatility always in the oil price. So let's see where the opportunity might be. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And now every Friday from 2:30, we're running these live streams that are proving to be very popular. We look at a whole range of different markets over an hour. If you're subscribed with the alarm bell notification pushed, switched on, you get an alert off YouTube just as we're about to go live. Anyway, let's take a look at today's market and talk about oil in a bit more detail. So as I said, the strength in the oil price continues. The strength we've seen year to date, it's up so far 30% since the end of 2020. That is a phenomenal rise for the price of oil, and we are back to levels not seen since January of last year. So despite the turmoil for world economies, the uncertainty, we've got the oil price trading at a 13-month high. The OPEC and OPEC plus cuts to oil production are still in place. There's another OPEC meeting in early March. At the moment, I think plenty of people are expecting these to stay as they are, although Russia is believed to be pushing for these cuts to be eased. I think plenty of us will be aware of some of the extreme weather that we're seeing in parts of the US at the moment. We're seeing it in Texas, and some crude oil production has been stopped there, and it has been slow to restart. So there are certain market analysts are saying that that's the reason for the latest surge higher in the price of crude. But overall, I just think we've still got plenty of bullish, positive sentiment in this market. So everything happening with the price action at the moment is defying any sort of bearish outlook or uncertainty about the economy. You know, clearly we have the vaccine out there. The hope is with the coronavirus vaccine will help the economy get somewhere back to near normal. The risk is if we have new variants that come out. But at the moment, oil is taking this in its stride. Since the November low, we've seen the price rally by 80%, which is an incredible move in what is under 4 months. We're also seeing plenty of revisions by major banks and financial institutions. Goldman Sachs and Morgan Stanley have both upped their price targets, end of year price targets for oil. And that's perhaps the initial concern at the moment. Is everything getting a little bit too bullish? Are we taking it for granted we're going to see higher prices? It's exactly at moments like this that we'll see markets reverse. Let's see what happens. But let's talk about the levels to watch, then we'll get back onto the platform. We do have those January highs coming into focus fairly soon, running from about 65 up to just ahead of $67 a barrel. After that, I think we're looking at a psychological level of $70. But let's deal with these levels first of all. I think we could see perhaps a bit more back and forth for the oil price as we nudge towards those January 2020 highs. On the downside, lots of support left on the way up. If we did see it sell off from here, I think plenty of support running from 57 above 58. So any short-term weakness looks like a buying opportunity. But let's put some color on these numbers. Let's jump back onto the chart and take a look at things in more detail. If you've watched any of our other videos on the other different markets that we cover, you know I'm a big fan of following the trend. And here's, I think, the latest leg of the trend for oil. If we go back to November, those lows briefly below $34 a barrel. We've had a good trend in place. We've got a succession of higher highs and higher lows for the price of oil. We're seeing it just today push out to a fresh recovery high. So the trend is still up. We have these higher highs and higher lows. A higher high has been set again today. So we'll look in a second about whether we should be still following this trend. But let's take a look at some of the indicators first of all. So looking down here at the RSI, this is a 10-day RSI, and this does illustrate, I think, why RSI's overbought, oversold indicators can be less than helpful when it comes to strong trending markets. The RSI on oil has been overbought since the beginning of February. So at the beginning of Feb, oil was around $53, $54 a barrel. The RSI was overbought, saying, well, the market can't really go any higher. It's overstretched. And of course, the market's moved up another $8, about another 15% just during February. We have popped out of overbought over the last couple of days as the market sold off back to sort of $58.50. But with the market recovering again, the RSI has gone overbought. So I don't think the RSI adds too much to the equation at the moment. The MACD has done a better job. So gave a buy signal in early Feb as the price rallied. We saw the MACD crossover, giving us a buy signal. It did give a sell signal just a couple of days ago as the market fell away. But of course, the market has pushed higher once again. So for me, it is more about price action when we're seeing a trend like this. Let's take a step back and come up with some targets, then look at setting up the next trade. So I flipped this over to a weekly chart, and you can see, I think, that the next obvious obstacle, the first week or the second week of January 2020, the price of oil pushed as high as, $65.43, $65.50, let's call it. So about $3 higher than where we are now. So there's an obvious hurdle there, I think, for the price of oil. After that, we'll be looking back to the highs from April 2019 at 66.55. So the whole, let's call it 65 to 67 area could be a problem for the price of oil. But for now, that trend is still up. Let's flip it to an hourly chart and see where the opportunity might be. So it won't come as a surprise that I want to trade with the trend. We have this shorter term trend I've picked up on. This is for the month of February. You can see the price went from, at the end of Jan, around $51.50 a barrel to where we've been this morning almost to 63. So for me, there are a few places here to think about placing stop losses. The closest I'd want my stop, below the lows from the end of last week. That's coming in around $58.50 a barrel. After that, we've got lows down here from Feb the 9th and also Feb the 12th, just ahead of 57. So for me, I think that's the obvious place to have my stop. I think I'll go 56.50 for a stop loss on this oil trade. But what I might do, we've had a breakout overnight. We are seeing the market drifting back a little after breaking through sort of $62.20, the previous high from the 17th, 18th of February. So I'm going to put an order in to buy. I'll put an order in to buy if it drops back into some of the previous range. So I'll put an order in to buy at 61 and I'll put my stop in at 56.50. Let's set that up. So we're ready to go. The market is currently trading around 62.34. I'm putting an order in to buy 80 barrels if the price drops to $61. So I'm buying into the trend. I'd like to see a bit of weakness to fill this order. Let's see what happens. So I'm going to buy in at 61. And if that order gets filled, put a stop loss the other side of the lows for the last couple of weeks. So that stop is going in at $56.50. And that's for our usual risk of around £250. Let's send the order through so we can sit there on the account at $61. So my order's filled, buying 80 at 61. My order's placed, sorry. So that's sitting there. Now let's take a look at the portfolio. So with my existing positions, I've got the stops a bit tighter than the order I just placed. So my take profit stops, they are now on the existing positions sitting at $58 and $58.50. They can stay there. Let's just take a look at the order. And there's the order I just placed, buying 80 at 61. The market's currently about $1.40 above that. So that order's going to sit there. And we'll see if it gets filled on some weakness. But for now, at least, I think that's the sensible trade to do. We've had this recovery since April last year. It's accelerated since November. It's accelerated again during February. Clearly, it's not going to go up forever. But for now, with it making fresh 13-month highs today, the trend is clearly up. So I would like to buy into any short-term weakness and see if we can push up, at the very least, above $65, those 2020 highs. That's it for the update. We will see if oil can continue to push higher. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.